welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Today, I'm talking about why Unity tanked this week, and actually, it rebounded, but it's still down over 30%. So I'm telling you what happened and what you should potentially do. Now, what happened? Unity software dropped 30% this week. The game engine monetization and digital twins platform posted solid growth for the quarter, but investors were not happy with a revenue mishap and poor guidance for the rest of the year. At one point this week, the stock was down 49.3% from last Friday's close and is now down over 70% year to date. Now, let's go over these first quarter earnings real quick. Revenue grew 36% year over year to $320 million in the quarter, driven by 65% growth from the Creative Solutions segment and 26% from the Operations Solutions segment. Create Solutions is the game engine that Unity is known for that helps develop easily built new games for consumers, mainly focused on mobile platforms. The Operate Solutions segment has services focused on helping developers monetize games through things like advertising. On top of just video games, Unity is seeing strong growth from its digital twins business, according to management commentary on the quarterly conference call. A digital twin is a virtual representation of a real-life three-dimension object and is helpful for companies in the industrial architecture and engineering fields. Unity leverages its 3D engine, which in the past has been mainly used for gaming, to help companies in this regard. While the first quarter looks solid, Unity disappointed with its second quarter and full year guidance. Next quarter and this year, it is expecting $290 million to $295 million and $1.35 to $1.425 billion respectively in revenue. This was well short of the average analyst estimates of $360 million in revenue next quarter and $1.5 billion for the full year. Why did Unity miss so bad on guidance? Well, since it got bad data from a large customer and made a mistake with its Audius pinpointer tool, Unity is going to lose $110 million in revenue than it otherwise would have gained in 2022. This is a huge mistake for a company as large as Unity and is likely why investors are so disappointed with the report. However, besides this mistake, Unity's business seems to be humming along just fine at the moment. Right now, Unity has a market cap around $10 billion, even after the 70% fall this year. If it can hit the high end of its revenue guidance, the stock will trade at a price-to-sales ratio of 7.3 by the end of the year. This is slightly expensive, but seems reasonable for a company with high gross margins and fast revenue growth like Unity. If you're confident in Unity's long-term trajectory, now could be a good time to pick up some shares of the stock. Let me know what you think below about Unity. In my last video on Unity, I commented to somebody that I'd buy the stock around $50. Now, this was before the earnings miss drop, and now it's around $40. I was going to buy it at $30, but it rallied right back up before I could purchase it. But still, $40 seems like a great price to buy Unity at, but I might give it a couple days because I could potentially see the price falling back down as it's had multiple 10% plus day gains. So I potentially see the stock falling back down just a little bit, and then I think I'll buy. But let me know what you think below on the stock. Please don't take this video as financial advice, and thank you for watching Morris Money.